All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that sellers were active at the 70 half to 72 half area, which is the main high volume area within the current balance. And we ended up getting a rotation lower, but ES still held above previous day's low, as did NQ. TF actually ended up breaking a little bit below Wednesday's low, but then found buyers and came back within range. So overall, that theme of relative weakness continues to be in play. The S&P is still trading within a range, within a balance area, and the door is still open for a directional move. And overall, the bias is still neutral because we're stuck in balance, but we have to note that, with NQ essentially putting in a double bottom at 18.5 yesterday and then holding above it today, at this point, if NQ starts breaking below the 18 to 21 area, we could see some selling happen in S&P as well. Same idea with TF. We're going to be watching like 1088 to 1091 in TF, and if TF starts breaking below that zone, then again that could trigger some selling in the S&P. Now we know that S&P has been relatively stronger, but if those markets continue their sell-offs, it's very likely that ES will break below 63 to 65 and below 60 and head down towards the 53 quarter to 55 quarter area at the very minimum. So heading into the open, we're going to be watching the respective support in NQ and TF, and then in ES we're going to be watching 70 half to 72 half. A strong directional break above 72 half could actually result in a move all the way up to 80 half to 83 half. Now in the middle we have resistance at 75 quarter to 77 quarter, but if that breakout above 72 half is strong, or on decent volume, decent momentum, and the other markets are also in alignment and heading higher, then we may not get much of a response at pre-market resistance and just head up back to 80 half to 83 half, which is the first spot where if we go there in a straight line, it could attract sellers, some profit taking, but at that point buyers would be in firm control. So we'll have to gauge the strength of the market in real time, look at where NQ is trading in real time, and then decide whether it's worth just taking profit there or shorting that zone. That's something that we'll have to gauge in real time because buyers would be in firm control. So you want to be careful then on the short side, because another move back up to initial resistance could quite easily just end up in rotation in some balance, and then we go higher and test 85 half to 87 half. Of course, that assumes the other markets are also putting in a decent upside move and catching up. On the downside, if we fail at the 70 half to 72 half bull bear zone, and we start heading lower and the other markets are also breaking below their recent lows, then the 63 to 65 zone may not hold. Right, that zone really only holds if the other markets are also holding up really well. But if we start seeing a sell-off in NQ and TF, then that 63 to 65 zone could just be a short-term kind of a pause point for ES before we head lower, and then a break below 60 to 60 half would confirm sellers in control and bring 53 quarter to 55 quarter into play. That would be a second test of that zone, and if the other markets are also selling off, which they definitely will be if S&P is heading lower, then this time we may not get as big of a buy response like we did last time. It may be just kind of a short-term bounce continued with another wave of selling, and ES may have to go now down to 49 to 50 half or 44 to 46 to get any decent buy response in this market. And for that to happen, of course, if the other markets are also hitting some decent support, it helps. In NQ at this point, if we start pushing below 3,500, then the next kind of decent support spot is around like 3468 to 3478. It's roughly about 20 to 30 points below 3,500. So we'll just keep that idea in mind. And S&P has been stronger, so the bounces could be a little bit better, but at lower prices. So right now, the bias is very neutral, as it has been over the last couple of days. NQ and TF are trading near their short-term lows, so we could get a decent move to the upside out of here, in those markets. But if they take out those lows, then S&P could put in, a catch-up move to the downside, and at the very minimum, retest 53 quarter to 55 quarter, and potentially head lower. So those are the main ideas on the day time frame. Let's keep an eye on relative volume to gauge how wide today's range can be. The market is still at a short-term inflection point. It can still go, 15 points higher from here. It can go, quite easily 15 to 20 points lower from here. So let's just be open to both ideas. Let's see where the other markets are trading, how strong or weak the internals are, where the momentum is, and then find some good trade location to get on board if the market does start putting in a directional push. So those are our main ideas. Let's see where we move this morning, and we'll take it from there.